Good morning and welcome to the second day of the second summit of the Association of the Fund Managers from Romania. My name is Horia Augusta. I'm the president of this association and I have the honor to open today the second edition and the second day of the second edition. Before starting the second day, I would like to thank to those who attended yesterday, especially Secretary of State Sebastian Burduja, Mr. Apostol from the Financial Supervisory Authority. I would like to thank to the panelists and to the participants. I'd also like to thank to today's attendees, Mr. Cristian Popa, board member of the National Bank of Romania, Mr. Thomas Tilley, senior economist for the European Association of the Fund Managers from Europe. I'd also like to thank to the other panelists and to the other moderators, Adina Deleanu and Stelian Muscalu. But before moving on, I would like to thank again to our partners that helped us with this event, Raiffeisen Asset Management, BRD, BT Asset Management, SIF Banat Crișana, SIF Muntenia, SIF Moldova, and SIF Transylvania. Today, over two panels time, we will be talking about the impact of the regulations on the asset management industry and on how the asset management industry is to be seen from the angle of the private equity funds and the alternative management. Um, our summit can also be viewed in English on our YouTube channel, and in Romanian you can view it on the Facebook page, and whoever is on Zoom can choose the language. Therefore, dear Mr. Cristian Popa, I would like to ask you, but not before thanking you for your presence today, what can you comment about our industry from the angle of the National Bank of Romania, and how can our industry help the National Bank and the banking system of Romania? Mr. Gusta, thank you very much. Hello everyone, thank you for your invitation to speak. I am always honored to interact with the asset management industry. I spent a good period of my career working for the asset management industry. This is my second summit. I participated in last year's summit in that live transmission. Thank you for the organization, and I'd like to tell you that this is a very good organization method. I was talking the other day about how close the Bucharest Stock Exchange is to the National Bank of Romania and how closely they cooperate. And my speech started with a number of historical details that I would like to mention today again, because they give us a bird's eye view. For instance, a member of the stock exchange's membership was assigned by the National Bank. The Bucharest Stock Exchange was also placed geographically close to the National Bank. Also, another person working from the stock exchange became governor of the National Bank during the war, and so basically these two institutions were quite close between the two world wars, and they became even closer. And basically they also have a joint mission in order to streamline the movement of capital, helping the investors get more capital. If the banking sector provides debt instruments, the stock exchange provides equity instruments, so they make up quite a team. This is confirmed by the weighted average cost. We know that the equity cost is minimum only when you combine the two, when you have an ideal mix between credits and equities, and at the end of the day it helps the real economy. I guess financial markets form an ecosystem, and a mature market of the mutual funds plus a well-developed stock exchange support a well-developed banking system. Crediting, lending, the intermediation, brokerage, uh, provide benefits when the stock exchange provide more development capital. Now the question that and this is going to be supported by the asset management and by a growing stock exchange, because all of the companies need capital and equity, and this comes from the stock exchange in most cases. I was talking about the partnership between these two institutions after 1990. Well, the Bucharest Stock Exchange was born as B and as the Bucharest Stock Exchange. So it allocated resources, it created a special directorate, it wrote the first law of the capital market in order to reopen the Bucharest Stock Exchange that, by the way, was operated for 8 years from the Mitița Constantinescu hall. This is where the bell rang for the first time. Then it moved into another location in 2003, but this issue cannot be forgotten. The fact that these two institutions started and set out together, and they contributed to each other's growth. Now, promoting our country by FTSE to the status of emerging market is a very good development. Basically, to the efforts and the results of our capital market are recognized, and the National Bank contributed to creating this fundamental instrument and institution. We can salute your presence. Now, alongside the stock exchange, we should also mention the secondary market of the treasury bills, where the National Bank cooperates with the Ministry of Finance for the management. The National Bank is also an agent of the Ministry of the Finance on the primary market. Therefore, the topics of the association of the funds and the National Bank are intertwined in many aspects and in many ways. Now, I was talking about the two markets and their close relationship to National Bank because this is also closely related to you, the fund managers. I think that if it hadn't been for you and for the capital managers, and if it hadn't been for your investors, markets couldn't operate and function successfully. This cooperation is ideal and can yield the best results if all of the actors and players cooperate in order to have a good outcome at the end to the benefit of the consumers and the citizens at large. So I guess we are also being connected by the fact that we have an equalized demand and ratio. As far as I'm concerned, the more visible you are, the more funding can be obtained on the markets, the better the performance of the state. We are also being connected by technology. It provides, it brings markets together. For instance, there are mutual funds, trust funds that can be operated and that can cooperate with each other. The banks and the fund industry are very close together. There is also another topic which is quite important as far as I'm concerned, more specifically financial education. You were saying that the fund industry has 200, maybe 300,000 investors. I'd say that with your support, these 200,000 or 300,000 investors could become more cognizant in terms of financial education. I think we should be doing that more. The National Bank of Romania is also providing financial education to adults and juniors alike. I would like to share with you two figures. The National Bank, with support from our colleagues from the branches and agencies in the field, visited 250,000 students, 50,000 last year, which is quite a record. The National Bank specialists talk about savings, inflation, history of the national banks, and other topics. So I guess that this is also something that connects us. Education and financial education is something that we should be sharing, and it's a good thing for both of our institutions. And this is like a communicated vessel. The treasury bill market, so the monetary policy decisions influence both yourselves and ourselves. And in brief, I think we are connected by a lot of people. I don't want to waste your time anymore. So I would like to give you a macro picture. I was saying the other day that we are playing with fire. So I guess that now we can see smoke. We can see a flame. Actually, we started to burn our fingers, and we're talking about the public deficit. And I'm saying that because I guess it is our duty to say, according to my mandate, because I need to be independent and I need to provide and defend stability of the financial markets. I guess that the deficit is the elephant in the China shop. So now the increased pensions and the other expenses that are not supported properly by the budget could generate a deficit of 11%. This figure is an absolute record and has been calculated by experts of the National Bank. And this happens during the pandemic of COVID-19. The budgetary deficit grew all over the place, but not to extreme heights, not comparable to ours. Anyway, most of the countries have started to incur temporary expenses for the healthcare, for education, but they never engage into permanent expenses that they wouldn't afford to pay back. So that's the difference between them and us. I guess that these actions will burden seriously and significantly our budget. We started this pandemic with the largest deficit in Europe, way beyond the cap imposed by the European Union. So in March, April, I advanced the idea of a two-digit deficit. People wanted to gamble that idea against me. They wanted to bet that the deficit is not going to have two digits, but we are close to this two-digit deficit. Even 10% is a lot, and the problem is connected to the future, when the deficit is going to be quite high, and we are going to have a hard work to deal with. Our indebtedness rate is on the upgoing slope. And of course that there are also positive matters. Foreign investors purchase some of our foreign debt, but they are not doing that forever. Also, there is a risk announced by the rating agencies, which is quite high. I guess that they could want to see a new law enacted before they wanted to lower our ratings, or they may not be that patient. Well, the question that has to be asked is that can we let our financial stability be so fragile? I think that the fiscal indiscipline that we've seen over the past few years is not helping us. Maybe the three agencies will be reviewing us to the year end. We have some negative prospects from some of them. The pension law is something that will cause problems. If this pension law is enacted, we will be downgraded. So I'm telling that publicly. Of course, that, just as I said before, nobody can guarantee that these institutions will or will not be patient enough with us. Maybe only the risk to see this happen can be enough for them. I also believe that we will get more loans, more expensive loans, to pay things that we don't afford. When we have a deficit, you're spending money that you don't have. So this is not something for you, but it expresses very well the circumstances. This is something to be heard and understood by simple people. So for every 100 lei collected as revenue, the state borrows 3 or 40 lei more in order to be able to cope with all of its expenses. So I don't think that if a person does the math for their own budget and income, can realize that they can continue with that sort of situation for much more. In reality, things are even worse because there is a deficit. On top of the deficit, there's the loans that are not seen in the deficit, but they have to be considered by the analysts. We need to pay these loans back. Unless we don't do that, our kids will be doing that, and this is not the sort of inheritance that will help our little ones be successful in their lives. Well, I will try to be more optimistic. I guess that the economy can help our recovery with some corrections next year. We could expect to have the economic level, the pre-crisis economic level in 2022. It all depends on how the pandemic will be evolving. And I would also like to get back to the deficit. Above a certain level of public debt, the deficit will become counterproductive, will create additional burdens, and will put the brakes on the economy. So it is very much important that markets were good with us, but you know very well that they may be sentimental sometimes. They may be paying you money today, but tomorrow they may be hanging up the phone on you. We need ever more money. We need ever more loans from these markets. Well, I'm talking with the local and foreign investors, with bank and investment funds. I like to get their feedbacks. It helps me as a decision maker. It provides an anchor into the reality for me, and it helps me make the right decisions. And I guess that the private market sees very well all of these evolutions because they do that with their money on the table. The feedback that I'm getting from these entities, well, everybody looks at the risk of the fiscal education evolutions. Not all of them like what they see. The sovereign risk of Romania is something that has to be considered. And I guess that if it hadn't been for these big expenses that we are engaged in, the loans would have been cheaper, and we've already started to pay back these loans. I would like to say something about the financial markets and system. They work well. If fiscally the crisis caught us on the wrong foot, but the banking system is good. We can talk about liquidities, solvency. We can talk about exposure to performance risk, about NPLs, about collaterals, and about all of that. We can see that there is a very big difference compared with what we had in the previous decade. The banking system is solid, is well positioned, and well prepared. I think that the National Bank took the right actions in all of the situations, prudence actions, procurement measures, administrative measures, asset management measures. So most of these assets are connected to bond funds, and therefore I can say something about the recovery of the treasury bills that the board approved on March the 20th this year, against the background of the high tensions that existed back then on the T-bill market. I think that the effects were seen. I think that we took active measures. We implemented some normalization measures when there are tensions. The National Bank is there to use its toolbox in order to plane down the tensions. the excessive pressures. Of course, that our staff analyzes very carefully any measure before proposing to the board these measures, and then the board makes the decisions that it deems suitable. This is an effort that we are making at the National Bank in order to maintain the stability of the market, the financial stability, in order to keep the balances and the right functioning of the markets. But I guess that the National Bank doesn't have one-size-fits-all solutions. Our financial and monetary policy cannot do away with the fiscal imbalances that are generated by the expenses. To conclude with, I would like to tell you that, well, the other day I was making a parallel between where the stock exchange was in 1995. They had some PCs in the Mitița room, the volumes were low, transactions were few. We had like a crude system in use, and now the Bucharest Stock Exchange is much higher. It's an emerging market. The capital need is still there. Basically, the purpose and the utility of the stock exchange is still there. Markets are trying to establish the right price. The capital is on the lookout for profitable investment, and I would like to say something that your market and the mutual fund market started from below and now got to over 1 billion euros worth of assets. 300,000 Romanians are investing and putting their money in your business. I would like to wish you to create value and to make inspired decisions and to grow together with us, and we should continue to contribute together to Romania's sustainable development. That much from me. Thank you very much. And I would like to wish you to have a fruitful summit, and all the best from me. Thank you very much for your beautiful words. I would like to congratulate you for what you're doing. I would like to congratulate you for the activities that you're doing and for the very valid points of view that you are sending across into the public space. I'd also like to thank you on behalf of the industry for the support that you've given always, and I would like to assure you of our openness whenever needed. Thank you once again, Mr. Popa. Now I am passing the floor to Mr. Thomas Tilley, Senior Economist for EFAMA. Bună dimineața tuturor!
Unfortunately, my Romanian isn't the best, but I take it you have a translator, so there should be no problem to follow. So, as mentioned, I am a senior economist in EFAMA. EFAMA is the European Association of Asset Managers, Funds and Asset Managers. So we present the industry vis-a-vis the European institutions. And today I'll take you a little through what the European investment fund industry has been going through in terms of trends supported by data in recent years. And also I'll discuss very briefly what happened in recent months with the whole COVID situation. Let me just share my screen. Okay, there we are. So first, a little bit about EFAMA. So as mentioned, we are the European Funds and Asset Managers Association. We represent the fund industry vis-a-vis the European institutions. We have a wide membership. We have 28 national associations, so you're in good company there. We have all the European countries, including some non-European countries like Norway, Turkey, Switzerland, Liechtenstein. We also have direct corporate members. We have 60 corporate members. And I think all the large European and even American asset managers are there. I also want to quickly take this opportunity to promote our investment management forum, which will take place on the 22nd and the 12th and the 13th of November. We have a CEO panel with 4 CEOs of major asset managers. We have Stephen Mayor from ESMA speaking, and lots of other people from the industry and the regulatory side. So you're more than welcome to join in that forum. It's also free of charge now and fully online. Okay, let's delve into the figures. These are, on the left-hand side, you see the net assets, so the stocks of UCITS and AIF. UCITS are more the retail funds, and AIF or alternative investment funds. These are more the institutional funds. As you can see here, in 2019, we had a big growth in both segments of the market. That was mainly because there was this drop in the equity market at the end of 18 and this strong rise in 19. Then end of Q1, we had the COVID drop in the stock market. So again, this big drop. And then we have a decent recovery actually in Q2, mainly again to the stock markets that went up again. On the left side, you see the net sales. And that's the net fund sales. And there, what's interesting, I just wanted to point out is, so the red ones are the UCITS and the right ones are the AIFs. And you see that flows of UCITS are a lot more volatile than AIF flows. So in good years, they bounce up very high. In bad years, they go down quite significantly. Whereas the AIF flows are much more stable. And why is this? Because the main investors in AIFs are large institutional investors, such as insurance companies, pension funds. So they invest anyway, because they have money coming in from their clients, regardless of what the markets are doing. And some of them are even taking some contra-cyclical investment behavior, like when the markets are down, they invest a little extra. Okay. I quickly wanted to mention ETFs. So these are exchange traded funds. So that these are funds that are traded on a stock exchange and they're mainly following an index. So these are passive funds and they're growing quite quickly. They grew from 15 till 2019 from 5.4% of total UCITS to 7.8% of total UCITS. And if you look at the net sales, so here on the dotted line is the ETF in percentage of total UCITS, and here is the net sales ETF in percentage of total UCITS. In 2019, they represented more than a quarter of all sales, all UCITS sales. Who is buying them in Europe? It's mainly still institutional clients. These are, insurance companies, the bigger players. We are noticing a little bit of an uptake in retail clients, mainly in the UK, in some of the Scandinavian countries. But if you compare this, for example, to the US, the market is about half the size, right? In the US, ETFs represent 15, 16%, and here we are at 7.5%, 8%. But a growing market. Right, here we break down Europe, let's say, into 5 regions. We have what we call Southern Europe, which are let's call them the Mediterranean countries. Northern Europe, which is Scandinavia. Western Europe, which is some of the bigger European countries, France, Germany. We include the UK there, even you can discuss about it being a European country or not. And then in green there, we have the Eastern European countries. And then there's one other region we highlight here, and that is the cross-border region. What is the cross-border region for us as European investment fund industry? These are Ireland and Luxembourg. These countries are very big in terms of where funds are domiciled. Because, I mean, this is not a secret in the industry. A lot of the global fund houses domicile their funds in Ireland and Luxembourg because of their economies of scale there, and it's easy. If you look in the UCITS sides, these two represent almost 60% of the European market. then a little less in Western Europe, and then Northern Europe, Southern Europe, and Eastern Europe. On the AIF side, the situation is a little different. There, Western Europe is the largest region, and that is mainly because of Germany, which have a lot of these so-called Spezialfonds. They're specific German investment vehicles that are still domiciled in Germany. Here in both markets, actually, Eastern Europe represents about 1% of the total European market, which is not a lot, but it is growing. More on that later. In terms of what are the largest countries in both UCITS and the AIF markets, as I already mentioned, Luxembourg and Ireland are the two big ones. Luxembourg represents 36%, Ireland 21%. And then you have some of the other Western Europe countries, mainly the UK and France, and then also Switzerland. Even though Switzerland doesn't really have UCITS, we call them UCITS-like funds. In the AIF market, Germany, as I mentioned, is the biggest. Then we also have France, and as I mentioned, Netherlands, due to their big pension fund markets. Then also Luxembourg and Ireland. So here, I mean, this is a slide I think our Director General Tanguy showed last year when he gave his presentation at the summit here. So we put the net assets in 2007 at 100, and we plot the growth since then. And then you can see that there's been strong growth. So the red line is Europe, and there's been strong growth, right? We are at since 2007 in Europe, in Q2 2020, we doubled in size. Growth in Eastern Europe was a little lower, mainly because it dropped in the financial crisis years and also the Euro crisis 2011. Romania has been doing remarkably well, especially since 2012. I mean, this big rise in 2015 is more a statistical point. That this is because this big Romanian fund was added to as an AIF. So, but even in recent years, you see that the growth has been strong. Especially 2019, there was a drop in 18, but in 2019 there was strong growth again. The crisis so far has hit quite hard. The Romanian market hasn't recovered yet from the drop in Q1 2020, whereas Europe almost has. But I'm sure this is taking up again in the later half of this year. Okay, that was all on the side of where are funds domiciled, what are the net sales and the net assets. Now we look at the other side, mainly who is buying investment funds in Europe. In total in Europe, we're around 13 trillion there is 13 trillion of fund ownership in Europe. This data comes from the European Central Bank. It's for 25 European countries. So it's slightly less than what we have on the other side. But you can also see, for example, this 13 at the end of 2019, if you compare that to what's domiciled in Europe, which was around 17 trillion at the end of 19, the 4 billion that's missing is exactly the UCITS and AIF that are sold outside of Europe. UCITS is a global brand that is sold all over the world. Asian buyers are buying UCITS. Who are the biggest markets in Europe? There are no real surprises. It's Germany by a wide margin, then United Kingdom, France, Netherlands, and Italy. I put the Romanian figures here for comparison. They are rather low, only 9 billion of investment fund ownership in Romania. Like I said, no large surprises in these top 5 countries in Europe. The one surprise might be the Netherlands, since it's not one of the bigger countries. But then again, this is due to the size of the Dutch pension fund market. They have a very large, very well-developed second pillar pension fund market. So these large pension funds invest a lot into investment funds. In terms of the sales over the years, the acquisitions, let's call them this way, who buys them? This is the total ownership, and this is who buys investment funds. They follow a bit the same trend. 2017 was a very good year. 18 was a mixed year, less good, and then 19 was good again. Acquisitions per country, Germany had by far the most. Then there were Ireland and Luxembourg. Why Ireland and Luxembourg there? Because the ECB measures by first owner. So what's behind this? These are funds that are domiciled in Ireland and Luxembourg buying other funds. So these are funds of funds. Then there were also nice sales in Italy, Sweden, and actually Romania was not too bad. Who is buying investment funds? Within Europe, we have three large investors. Let's put it this way. We have households, which account for around 24%. Then the largest investor are insurers and pension funds. These are by far the biggest investors in European investment funds. This is mainly centered in, let's call them Western European countries, where you have these big insurers, pension funds, institutional investors. And then a growing trend in Europe is what we call these other financial intermediaries. What are these? These are all other financial players in the financial system. These are not banks, because banks are monetary financial institutions. It's the little purple line here, which is not really growing. These are the other players. What are they? They are like holding companies, stock exchanges, central clearing parties, but mainly these are funds buying other funds. This is a big trend we've been seeing in recent years. And there you see also that the composition of fund ownership in Europe as a whole is radically different from what we see in Eastern Europe and Romania. In Eastern Europe and Romania, households are by far still the largest buyers of investment funds. They are more than 50% they buy themselves. Whereas in Europe, it's really these institutional investors, the pension fund insurance and the other financial intermediaries. Again, this proves it. This is the breakdown of the acquisitions by type of buyer. And in recent years in Europe, we see actually that households, here the share in light blue, have actually sold. In 2018 they sold more funds than they bought, so they left the market. In 2019 there was a small positive acquisitions, but they European households in the last 2 years haven't really bought funds. The market has been supported by insurers, pension funds, and other financial intermediaries. I mean, of course, you can say, okay, they haven't bought funds directly, but who are the clients of the pension funds and the insurers? These are households, right? These are retail investors. But it's important, and then this is a clear difference, for example, with the US market, where households are the main buyers of funds. In Europe, in recent years, we haven't seen it. And this is why the Capital Markets Union initiative of the Commission is so important to us. We need to push up retail participation in the financial markets. And as you can see from these numbers, there is still a lot of room there. Very quickly, what happened in 2020 so far? So now we're back on the other side, where our funds are domiciled and sold. These are the flows per month in European, in the whole of Europe. We had outflows of more than 300 billion in March, the largest outflows ever in total amounts. However, if you measure it in percentage of net assets, which is a fairer way of judging this, we see that the outflows were slightly under 3% of net assets, which is about the same as they were in October 2008 at the height of the global financial crisis. And what's also interesting to note is there was very large outflows in March, but April, May, and June had decent inflows. So the markets bounced back rather quickly. Investor confidence bounced back rather quickly. This is with one caveat, because here we see what type of funds were sold. This is cumulated sales for the first half of 2020. So how many in total equity funds were sold over the first 6 months of the year? How many bond funds, how many multi-asset funds? And we see here, despite the bounce back in April, May, and June, in total, all long-term funds, equity, bond, multi-asset funds, other funds, are still negative. I mean, in July, it will cross over back into positive 30, because July will be a good month. But what is remarkable is these very high inflows into money market funds, and these, as a cash-like equivalent, shows that investors are still wary about what will happen to the world economy, to the European economy, because money market funds is really where you invest in if you take a wait and see attitude. They are very liquid, and you don't lose value on them. So this is a clear sign to us, and it's not just in Europe, also in the US, you had massive inflows into money market funds, showing that many investors are still taking a wait and see attitude towards future developments. Okay, this was my presentation. You have a link to all our publications here. I'm sure the presentation will be distributed to all of you. And thank you for your attention.
Mulțumesc, Thomas.
Thank you, Thomas.
Okay.
Foarte interesant.
Very interesting presentation. From one of the slides that you mentioned regarding the slight decreases in the industry during 2017-2018, including in Europe, Eastern Europe and Romania, that was the time when the MiFID Directive II started applying in Europe and in Romania. For sure, it was a difficult moment for the entire Europe. So if I could now switch now to and link this to Adina Ardeleanu. Good morning. Good morning, everybody. And to continue the discussion about the impact of regulations on the asset management industry. Hi everybody, to all our viewers, to my co-panelists. I am Adina Ardeleanu, founding member of the economic news and business events platform financialintelligence.ro. I would like to thank the EFAMA for the invitation to moderate the impact of regulations on the asset management industry. In the start of the panel, I would like to congratulate the EFAMA for the second edition of this summit that brings together renowned panelists and raises to discussion very important topics to the investment fund markets. This morning we've had the honor to listen to the macroeconomic context presentation from Cristian Popa, and Although we are now an emerging market, the news in this area about the situation in Parliament, where we see the forecasted growth for pensions somehow worries investors. We heard Thomas Tilley from the situation of the industry, and now we talk of the regulations and legislation. Although it might be a bit dry, I'm sure that our guests today will turn it into an interesting debate. We have with us Josina Kammerling, Head of Regulatory Outreach in CFA Institute. Good morning. Josina promotes the integrity on the capital market and investor protection. We also have with us Silvia Buicanescu, CEO in the Central Depository, Vasile Cristian Pascu, head in BCR, head of department, and Cosvin Mizov, CFA in the BCR Financial Institutions. We now give the floor to Josina Kammerling to tell us about what happens with the project at the European level on the the capital market unions, and how intense are discussions regarding the COVID pandemics. Josina, if you can hear us, you have the floor.
Thank you very much, Adina. And I listened to the two preceding keynotes with great interest, and also some of the upbeat messages that I was hearing. And I'm going to start my brief intervention with two quotes. The first one comes from Jacques de la Rosière, who, of course, was the originator of the European supervisory authorities. He said in March 2020, the coronavirus is not the cause of what is happening to us financially, but it is a powerful amplification factor on a ground already heavily mined. And that is really quite a cautionary statement. But the other statement comes from Ursula von der Leyen in her State of the Union speech last week. And this is quite upbeat. The opportunity COVID provides us with, it reminds us of the many things we may have taken for granted or forgotten. We have been reminded now that our economies are linked and that we need a fully single market. And this is essential to our way of life. For most of us, it's also about the opportunity to make the most of the freedoms we cherish as Europeans. So these two messages show that we started in a field full of mines. We haven't yet overcome quite a lot of the issues that came with the 2008 crisis. And we are now in unprecedented territory, black swan territory, I would say. We did a coronavirus survey with our global membership, and I can provide the link to all of you of that because it's very interesting reading. In one of the graphs and tables we did, we checked with our members what they thought about regulation. And actually, a majority of members in the EMEA region, Europe, Middle East, Africa, thinks that regulators and policymakers at this point in time should take a proactive role and consult with stakeholders and be really proactive, engage in dialogue on possible solutions and redesign possibly new regulatory frameworks aimed at kickstarting market conditions. The vast majority of our members in EMEA also think that securities regulators should be focusing on educating the public about risks. And I know Cristian Popa said something about financial education, which is indeed very important in this time, as knee-jerk reactions can actually lead to great poverty if they are not taken in the right way. Educating the public about risks on investor fraud, where they can be taken advantage of. So that really is a key issue. And we took note also that at the European Commission level, Mario Nava, who is heading as Director General DG Reform, which looks at sort of the recovery in the EU, has stated that financial education should be coordinated at the European level. Of course, it's a prerogative of the national member states because it's related to consumer law, but it should be coordinated and stimulated. And that is a first, because typically the Commission never intervenes on national prerogatives. So what has really been at an issue? Before Corona came, I was looking at several things. As the new Commission came into being, we were looking at measures of horizontalizing investor protection issues. We were looking at product governance, the effects of MiFID, PRIPS on the investor public. We were also looking at systemic risk, liquidity stress testing, the measures taken by ESMA. We were looking at capital formation. What is happening between private and public markets? Together with the stock exchange, FISA, the European Stock Exchange formation, the accountants at the European level, and the EBRD and CFA Institute, we set up a task force to look at IPOs in the EU. What is happening to that market? The conclusions are well known and surely not a surprise to this audience. There is a lack of public market interest. Private markets have been growing rather more than public markets. But private investors need to be stimulated to buy into equities. Now, when you look at the European EU recovery program and the possible IPO fund, which is a fund at the EU level, specifically targeted at IPOs and possibly also at existing secondary issuance, you see that there is a need. We need private investors to come back in, and that is a target. If the European Commission is coming out with a second version of an action plan on Capital Markets Union today, a leaked version has been circulating, and I'm sure most of you saw the article in the Financial Times with comments on this leaked version. I think that version and this renewed action plan, to my mind, is the clearest indication of pragmatism at Commission level. Why? There are 16 actions. They're all very pragmatic, really saying, you know, we need to focus on the nuts and bolts. We do need to focus on supervision. They specifically refer to the Wirecard scandal. So supervision coordination is important. And of course, Wirecard happening during the German presidency is an indicator that even big countries have issues when it comes to supervision. We also need to look at how regional structures can help building up that single market. I would say, you know, we can't create in one step a single market. We have to build regionally. And I think this is an awareness. We're no longer in 2015 when we had an English commissioner proposing a capital markets union founded on London. We are now in 2020, pre-Brexit and post-Corona, or in the middle of Corona, we are now in a situation where we need to build a continental market. And regulators will be focusing on that. The upbeat and strong messages from the supervisory authorities, ESMA, EBA, and EIOPA, clearly indicate that they see role for more coordination, but also looking to national divergences and regional strengths. What can we learn from the Nordic conglomeration? What can we learn from Central Eastern European conglomeration? How are you working together? These are key times to bring best practices forward. At CFA Institute, of course, we have a CFA Society Romania, who are very active, and I'm always delighted when I get input from that society, because they're very pragmatic and really come with case studies. But case studies seen by members on the ground throughout the EU is helping the European Commission, is helping regulators, is helping IOSCO to look and see how we can tweak the markets. Product governance, I would say, is a key issue. It gets, I think, a merit of about 3 or 4 action points in the new action plan by the Commission. Product governance really is still in its infancy. We at CFA Institute are perhaps more upbeat than others about MiFID. We think overall MiFID achieved better investor protection. But we do see the issues. We see the issues with communication to investors. The suitability criteria is absolutely not fit for purpose still. Even BaFin, the German regulator, wrote quite a strong piece of research based on case studies on this. So we need to look at it. We need to look at the PRIPS, key investor document. Many things are excluded from that. Past performance, which is one of the things that we at CFA Institute think is really important for an investor, is excluded. There is a view to perhaps including a link to past performance or another document, but investors need clear, simple information. The real thing is to achieve good investment advice from professionally qualified financial investors. And again, the action plan of the Commission refers to an EU label of financial advisors. This, I think, is very good. This would enable finance professionals to move much easier from one country to the other and will help also raise the profile of EU capital markets. You need financial education, but you don't put all the onus on the final investor. You need good product governance and good financial information about the product you're selling. So these really are some of the key issues that we are seeing. Obviously, MiFID, whether it's through the quick fix or the rather more longer revision, which is coming next year, will be a key focus. And I would advise all of you who are listening and working in the investment management industry to give your input to your association, to the regulator. The more case studies, the more practical examples the EU authorities can work with, the better. Because it's through practical examples that we can see what is working and what is not working. So I would really advise that, specifically also because one of the key debates for MiFID reform is on investment research, and maybe the lack of it, also the provision of investment research by bigger banking groups taking on board and perhaps dumping investment research, and smaller investment research boutiques not managing. And also, as we point out in the IPO task force report, a lack of coverage of SMEs. Now, SMEs are the backbone in Europe. We need that coverage. So how we are going to provide that, this will also be one of the key decisions. So as you can see, and as if you read the action points by the Commission, there is a lot of work on board. And certainly there will be new regulation, but above all, I think regulation will be tweaked to be fit for purpose. Thank you.
Thank you very much for the presentation. I know that your agenda for today is quite tight, so I will address now a few questions to you. First of all, you mentioned the Capital Market Union. How do you see the integration or the role of a market that is quite small, such as Romania, in such a big structure? Because I have heard fears that we don't have a place there.
No, you do have a place. As I said before, looking at a regional collaboration, you have you have a specific market, like every country has a specific market, but there is, I remember I used to work in the European Parliament as a specialist on financial services, advising the crisis committee, which was a special committee then set up to deal with the financial crisis. We looked at regionalization, and I remember Danuta Hübner, a Polish MEP and former minister, really saying we need regional specificities working within a single market. And that is true. Just think, if you have local knowledge, you can address the needs for investors. You do need that. You can't possibly deal with that from an EU level. So it's important to build that market. Every single market in the EU needs to contribute to that potential. You have a very young and dynamic financial services, people working in the financial services who move abroad, I mean, if I see the society members we have in Romania, I'm always impressed
Thank you for that, for those words. Also, you mentioned that money is flowing rather in private equity, private markets, rather than in public ones. So what do you think the reason is for that? And what do you think the regulator should do? Is regulation framework a problem for that?
Yes, I think the reason really is that companies also prefer attracting private market investors. They feel the conversation goes better. So we need to address that issue of information, that flow of information. Again, the Commission unveiled today a central database for company information. That's going to help. The more information is easily available, the more the public market will benefit. I think also you need to look at what is happening in the Nordic markets. Remember, those were quite small markets and they grouped together. And they see there that there is a renewed interest in investing in smaller companies, in SMEs. So I think we can learn from the Nordic example.
Thank you very much, Josina, for your time today. Acum o să trecem de la Uniunea Piețelor de Capital, un subiect la care vom mai reveni, sper eu, în partea...
Move away from the topic, but we'll get back to it, and we will be talking about the European directives that have an impact, the directive regarding the shareholders' rights and the central depositories. Hello, Silvia. What are the benefits of these European directives? Hello, and thank you very much for your invitation. It is my pleasure and my honor to be in this summit. Thank you very much for this question. Well, I would like to share a presentation that I've prepared for today that refers to the impact of the EU regulations on the capital markets from the angle of the central depository. So we will talk about the CSDR that applies to central depository, and about the SRD2, which is the directive that governs the rights of the shareholders. When it comes to the purpose and benefits of the CSDR, this is an EU regulation that does not need to be implemented locally by the EU member states and is applied on an as-is basis by all of the member states. The purpose is, of course, to create a uniform post-trading framework in all of the EU member states, introducing a set of joint rules in order to reduce the complexity of the regulations governing the EU markets caused by the differences that exist nationally. So, or among the nations. The benefits are obvious and conspicuous. Of course, that there are procedures and practices and rules of the central depository as a main infrastructure of the market and the financial market are now harmonized with the new EU regulatory framework of the European Union. Also, the performances and quality of the service of the central depository are enhanced in a competitive environment that secures equal conditions to all of these infrastructures and all of these depositories. Also, by implementing this the directive, the risks are mitigated. I mean, the risk that the central depository can be exposed while operating, and this is done thanks to these measures and actions. Not lastly, the continuity, the operational continuity is improved, and the cyber resilience. Continuing and In addition to that, well, the central depository has now the clearance as per the CSDR at the end of the last year, when the improvements brought to the infrastructure, to the post-trading infrastructure on Romania's capital market were recognized. So we are authorized, just like the other 21 central depository from the European Union. We are talking about large ones that operate on the markets from France, Germany, Sweden, the Czech Republic, Bulgaria, and so on. But there are other depositories that are now being authorized throughout the Union. They haven't passed yet through this clearance procedure, which is extremely wide and complicated. When it comes to the shareholders' rights to directive, SRD2, well, we are talking about a directive that has to be transposed nationally through a local law. This was done in Romania. It was done quite recently in August of this year. Law 158 was published in Romania's official gazette. It became operational as of the September the 3rd. When it became operational, the old regulation 1212, the old regulation was waived. The purpose of this directive is to encourage shareholders to take more interest in their own investments on the longer run, and of course enhancing the transparency of the issuers. How is that seen by the central depository? Well, although I said before that this is a very new law that has just been enacted less than a month ago in Romania, well, in Romania we are rather more advanced than our peers from other European countries are, because we have Law 24 and Law 126 regarding issuers and capital markets, whereby we have already implemented this directive partially. More specifically, the issuers have the right to identify shareholders, to provide information to their shareholders, and the brokers have the rights to defend the rights of their shareholders during various corporate situations. So, all of these facilities were introduced with an obligation to disclose. Basically, it was the obligation to disclose the components of this global account so that the issuer can know their shareholders. In other European nations, this obligation did not exist. Acționarilor români la această entitate și niciodată până acum nu s-au cerut disclosure-uri pe acest emitent și pe alți emitenți care sunt înregistrați în sistemul depozitarului central. In terms of benefits, the main benefit is that corporate governance has been improved, the corporate governance of the issuers. There are no more operational barriers in the information flow, both ways. Transparency is enhanced. The involvement of the shareholders in the long-term decision process is encouraged. There is a more efficient communication among all stakeholders, between the issuer, the broker, the shareholder, in all of the processes that are associated to the General Assembly in general, not only those that involve corporate events. Also, equal treatment, fair treatment to all shareholders is secured. That contributes significantly to improving the confidence that the investors have in a certain market. Just as I said before, the SRD2 directive has an impact upon the three categories of entities: issuers, brokers, and shareholders. Well, they have the right to know their shoulder, including the custody chains, as it happens in cross-border situations when there are more links than these three. There are 5 or 6 intermediate links. Also, issuers don't only have the right to know their shareholders, but they also have an obligation to raise the awareness and provide information properly to their shareholders. Brokers have the obligation to provide information in a certain standardized format between issuers and shareholders, and they need to take the necessary actions in order to facilitate the enjoyment of the rights by the shareholders. Also, the highest benefits of this directive are given to the shareholders, because this directive establishes clearer and more standardized and easier conditions based on which shareholders can participate and vote in the general assemblies of the issuers. They can set their own financial rights, profit sharing rights, for instance, and they can participate in any other major events that are organized by a certain company. They can do that either directly or by proxy or third parties. As far as the depository is concerned, the scope of application of the SRD has been widened by the possibility to identify the shareholders, participation in corporate events other than the general meetings, but also general meetings and proxy voting. Now, as far as the central depository is concerned, enforcing this directive refers basically to taking over of a request from the issuer by transmitting the shareholder's identity to the participants in ways, formats, and time frames established by Regulation 1212. This is where the difference comes from. And before, at the central level, standards of the European Union were started to be implemented as soon as 2017, but not for the general meetings. The SRD2 directive imposes the implementation by the central depository of a standardized General Assembly processing method. Our country has been accustomed to using the technical platform developed by the depository for the corporate events. More specifically, the issuer would introduce in the platform that is used by the brokers the information necessary for processing a certain corporate event. Well, now, for the general meetings that do not necessarily involve corporate elements, the information method, the communication method through the brokers and participants in the system is going to be done centrally. Now, about ID reporting, well, this is going to be done through this system in the same way that it has been standardized and automated and it is defined in section 1, and there is a consolidated register that will be sent over to the issuer as requested in the directive. Well, the depository will take over from the issuers other information regarding the general meetings, and this information will be sent according. Actually, this information is already being transmitted according to the upgrade that we did on the law, but this is going to be transmitted according to the new framework and method, and we published on our website information about the general meetings, other information from the issuers that are listed on the stock exchange, and so on. Well, that much about the SRD2. I would like to get back a little bit on the CSDR, and I would like to highlight on what the CSDR meant for the central depository. It was a very lengthy process that lasted for several years, and basically it lasted for more than 2 years ever since we submitted our application file to the Financial Supervisory Authority of Romania. We were already working with the National Bank, because the National Bank is the authority that supervises us and regulates us when it comes to the disbursements. A new relevant authority came in, the European Central Bank, that stepped in and for the disbursements in euro that we are providing. They also enforced a cap, so-called significance cap, that we need to comply with. In spite of all of that, the efforts and the preparations that we started for this CSDR implementations had started way before that, about 10 years before. We implemented SWIFT at the level of the central depository. The trading and post-trading systems were separated. We reduced the disbursement time frame. Also, a set of procedures and new policies were implemented by the depository. The risk management function was also implemented, which is also another requirement of the risk management committee and the CSDR, so on and so forth. And all of these changes that we made in terms of regulations and system of the central depository and in terms of rules made a significant contribution to improving the services that we provide to our customers, because at the end of the day, this gets to the investor. So foreign investors found in our country conditions, rules, procedures that are similar to the ones they are already familiar with after working on foreign markets. Thank you, Silvia, very much. I would like to get back to the SRD directive. If somebody wants to exercise their shareholders' right, they need to know that they are shareholders, first of all. And I am referring to the mass privatization program that we had, because many people kept those shares. Some people forgot about those shares. Some shareholders may have died. So basically, please tell us, is there any plan to raise the awareness of these forgotten shareholders? What's going on? Well, unfortunately, in section 1, we have over 8.4 million shareholders. Probably that some of these people are not even aware that they are still shareholders and that they still have the shares issued and floated during the mass privatization program. So we try to organize as frequently as we can events and communication opportunities insofar as we can, especially right now, given the conditions that we have. For instance, right now we are not working with the public in order to control and check the impact of this crisis upon our employees and upon the business of the central depository. But we are not stopping here. For instance, one of the main activities that we have in mind, and this is the closest one in time, is to participate jointly with the Financial Supervisory Authority in the Investors Week event. My colleagues are right now working on a video that will be broadcast publicly and that provides information transmitted in very simple words about what is a shareholder, what are the rights of shareholders, how can a person find out if there are shareholders or not, how they can get their statements of accounts, and what they can do in order to make the most of the shares that they still have. We are also having, in the long run, an option to provide free services. For instance, is the IBAN account registration service. And I'm talking about the payment of dividends. So, for instance, if we have the NIME personal identification number of these shareholders in our database, and on top of that, if we had the IBAN, the dividends could be automatically paid within that bank account without any formal request. So if these people have dividends, they would get them automatically. So I'm wishing you the best of luck with your efforts, because they are very much important inter alia for increasing the liquidity. Thank you very much. We now move from the central depository, which is a central institution of the market infrastructure, to the prospects of the custodian depository, and we move on to Mr. Vasile Cristian Pascu, head of the Financial Institutions Department of the Commercial Bank of Romania, BCR. Hello, Adina. Hello, everyone. I would like to salute my colleagues from the association too. Well, yes. So we are talking about the directive of the shareholders' rights, and it's also a regulation. Sylvia spoke about the angle of the central depository. I will be talking now from the angle of the field player, so to speak, with some practical insight as well about legal matters that, as far as I know, are a little bit dry and less attractive, but I will try to bring a different angle on that sort of matter. Well, I will try to share my screen. I hope you can see my screen now. Well, yes. So basically, why was this directive needed? What was the purpose of that? So we had MiFID 1 and MiFID 2. The SRD has two parts. We need to see if there will be a sequel of that. I apologize. We're unable to see your presentation. We can see just the folder. Maybe you can turn it off and on again. So now it's fine, we can see it. Well, so first of all, why was this necessary? Why was this directive necessary? Because it was found after the financial crisis that in general, institutional investors and the asset managers were rather focused on short-term activities. So the SRD2, the second part of this directive, is aimed at incentivizing shareholders into investing on longer terms in order to provide some stability. And in order to do that, some principles and some corporate governance principles had to be implemented. Briefly, this is how we can represent graphically this event. So basically, shareholders have to be identified first, then information needs to be sent to these shareholders. Their rights in the company should be facilitated, and then a better transparency is needed in terms of the processes and the procedures of the asset managers, consultants, and everybody who is involved along the way. Well, getting back to the targets, I will be reviewing them on an item-by-item basis so that everybody can understand them better. The first objective refers to the rights of the shareholders and the right of the issuers to identify the shareholders. So basically, the brokers are obliged to communicate to the issuer all of the pieces of information regarding the identity of shareholders. What about that? That means that if an investor from Romania that has some shareholders in Spain and uses a local custodian, and the Romanian custodian uses, for instance, Erste Bank uses their own custodian in Spain. All along the line, the information has to be transmitted to the final shareholder. That means that the investor needs to transmit the information if requested, but there are two issues here. There is an option where you can send the information back along the chain or directly to the requester. That means that as far as the custodian is concerned, the operations become more complicated. They need to have an exchange of SWIFT keys that involve some cost for the mutual recognition. It involves establishing some processes to send the information up and down the chain. Also, there is one sort of SWIFT message that should be turned into a different sort of SWIFT message at the end of the line. So there are all sorts of processes. And these are indeed standardized and very well organized, but they involve some costs and some adjustments that need to be done along the way. It's indeed that in time these things will get better, but they are actually a nightmare, to be honest. So the broker's obligation to facilitate the transmission of information was, I explained how the information travels. There are new requirements about how things should be done, so that, for instance, asset manager can act swiftly and legally. And not lastly, transparency is something very important. Transparency of the payment policy, payment of the company managers. Well, in terms of the asset managers and functional managers, what is their obligation as per the SRD? They have an obligation to actively participate in the long run, because this is the actual purpose. So each administrator and sometimes they can be asset managers or insurance companies. So they have to be prepared and publish an involvement policy in which they describe the way in which they get involved in the long run, and this policy needs to be correlated with the investment policies, and this policy needs to describe the way in which the managers protect the issuers, the strategy, the performance, the structure of the capital, the social impact upon the environment. In yesterday's panel, we actually spoke about the social impact and about corporate governance. So also dialogues with the issuers need to be done. The enjoyment of the rights, the exercise of rights. How can interest be protected? So the obligation is also to publish the way in which this policy that I just mentioned was enforced, including a general presentation of the behavior and an explanation of the portfolio and an explanation of the way in which advisors were hired and what was requested from them.
Furthermore, to include in the annual report how in which their strategy is in concordance with the profile and duration if we refer to the companies, and how do these investments contribute to the average and long-term performance of the assets, and the obligation to make available to the institutional investor for the assets managers how they implemented the strategy and how it contributes to the long-term performance. I think these are the most important, in my opinion, aspects regarding the managers, the fund managers. Of course, there are also other novelties brought by the regulator, but for asset management, I think these are the most relevant. For me as a custodian, I think it is very important that I want to mention now that it is for the first time in the primary legislation when the institution of the custodian is recognized, being able to participate in discussions without their needing a special proposal as it was prior to this law. And I think that there are very many cases in which the custodians were forbidden in taking part just because there were problems with these special proxies or other procedures. Currently, the custodian can take part in any general shareholder meeting strictly through those conveyed through any means of communication. There's no need for any other power of attorney, which I believe to be extraordinary after years on, in which as custodians through associations have tried to change the legislation, and this is indeed quite an achievement. I would now move a bit to the second topic. We heard it from the perspective of the central depository. They will make the great the efforts, and we're happy that the central depository was certified last year. From the perspective of custodian and from the perspective of market participants, the main advantages of this regulation are three in my selection. There are several, but that's how we see them. Regard the increase in the number of term expense transactions, setting a expense discipline, and the other one regarding the depository that is increasing the prudential and supervision requirements. As you know, in the local market, we have two depositories. We have the central depository expensing trades on the stock exchange and the SAFIR. The a central depository for state-owned. Now, in my opinion, a welcome aspect is that the settlement instructions to Safir, because I should have said that with respect to the implementation in settlement, this was postponed to February 2021, but operational aspects, how instructions are settled in Safir, brings quite a benefit. Instructions sent in the settlement system of Safir will no longer be deleted because, as you know, at the end of the day, all instructions were deleted and they had to be re-input. Well, now these instructions will be in the system. It's the actual settlement date that was added. So what was sent, the instruction is in the system until matched with the counterparty or until annulled bilaterally. So from this perspective, we entered a big players league because in the big markets this already happened for some time. So it's better late than never that we have this mechanism that operationally brought a lot of problems. Furthermore, the money settlement sanctioning mechanism is something important because there were certain fees from the value of the transaction. But as I said, on settlement discipline, things were postponed until 2021, which is a good thing, of course. And I would also add a matching tolerance for the colleagues that know what it means to send an instruction for settlement. This is a good thing because matching was done to the send, and you always had the issue that the buyer's representative, let's say, had an instruction with an amount, the seller's representative had a different amount, and these didn't match with respect to settlement instructions, so we couldn't match it to the send. It's a good thing that this tolerance, matching tolerance, was added, and it's €2 for amounts less or equal to 100,000 euros, and 25 for those over 100,000 euros. So, in my opinion, again, these were the most relevant aspects for the CSDR in Romania. There's still a room for improvement, operationally speaking, but we are on the right track and entering the big players league with all these changes that standardize settlement flows and trading flows. What I would also like to briefly present, because it's another topic of interest for the asset management industry, the FSA regulation 20 per 2020. This is a regulation that the FMA collaborated with the FSA on, and we've managed to make this amendment, which entered into force at the end of August this year, and these are absolutely necessary amendments to be made, especially with respect to how the fixed income evaluation tool procedures went. If a tool was less liquid, it couldn't be evaluated at its fair value. You were somehow forced to we use the small quotation values of the market, and then you had to switch it to depreciation. We now have the possibility that each manager that wants to have the freedom to use other methods as well, they can change their prospectus, and we can consider other quotations as well. And the regulation mentions the bid type, the counterparty, and last but not least, the fair value for mathematic models if a if the tool is not liquid. I would also mention the other case in this regulation. If stocks are issued by companies listed to the stock exchange, if they believe that the activity is not relevant, the manager can decide that although listed to the market, to the stock exchange, although this is considered relevant or not in the active market, they can switch and change the method and evaluate the company based on a valuation report from a valuator. So these are important changes that allow the manager to be closer to a fair value, a market value, because in practice it was found that in many cases that the price of a company is not fairly presented, and it's very good for a manager to have this possibility to use these methods to make it as accurate as possible. This is what I wanted to present briefly. Yes, Adina. Thank you so much. I have two questions about your presentation, very, very briefly, if possible, to hear your answers, because we are already at a delay. On this FSA regulation and the possibility to evaluate at fair value, do you see a massive switch to using this method at the industry level? So a massive shift and everybody making these adjustments on various issuers, then maybe to see a massive movement on the market, or not, rather? It's a very good question. I think, well, let me answer somehow in a twofold perspective. On alternative investment funds, I expect that the evaluation method of companies on the stock exchange, so although they are on the stock exchange but they're rare, so they don't reflect the value, I'm not expecting much, especially for the issuers where visibility is not very relevant. With respect to fixed income tools, yes, I expect the big groups. So managers belonging to big groups will switch to using this fair value method or the use of another quote, because during the crisis period we all understood that it was necessary for these tools to be valued at their fair value. So I don't expect a major shift, but I do expect that the managers be able to change it, will change their prospectus and will use it. And with respect to SRD2, you mentioned adjustment costs. You used that word, a nightmare for now. And let me ask if it's such a frightful nightmare that it would determine some players to exit the market due to these costs, or are these still manageable? I think they're manageable, in my opinion, because the custodians present in the local and international market are big groups that can bear the costs. These are not at all low, we have to admit it. Adapting the systems, the flows, the procedures does entail costs. Some are on the go made, but I don't expect that as a result of implementing this regulation to have them to see exiting players. I don't expect them to come in
Mulțumesc foarte
CRD2.
mult, Cristian Pascu,
Thank you
pentru
very much,
moment.
Cristian Pascu,
Te
for the
invităm
time.
alături de noi
Please
la sesiunea de Q&A.
stay with us for the
Trecem
Q&A
acum la
session.
un subiect
We
legat
now
de
go
managementul
to
riscului și
a
în
topic
special
on risk
managementul riscului de
management,
lichidități și
liquidity risk
discutăm
management,
cu
and we
domnul
speak
Cosmin
of
Mizov, CFA Risk
Cosmin
Management Manager
Mizov,
site
CFA
Certificate.
for
Bună,
Certain
Cosmin!
Invest.
Cum
Hi,
se văd de la tine
Cosmin.
reglementările
How do
recente
you
privind
see the
managementul riscului de
recent
lichiditate?
situations on the liquidity risk
Deschide microfonul, te rog.
management? Please turn on your mic.
Perfect.
Hi, everybody. If we refer to the simulation of the liquidity crisis, this is just the official regulation of a practice that already exists in the industry. This is a tool through which IAFs or UCITS managers use for various liquidity funds. So creating these simulation or simulated crises, what does it mean to simulate a crisis, a liquidity crisis? It's to define significant risk factors for your funds that you manage, to define certain crisis scenarios depending on the history that existed or what you believe might happen depending on the macroeconomic context, to define certain indicators through which to monitor this possible liquidity risk. And such a relevant indicator is the buyback coverage rate from the ESMA perspective of the funds that you manage, and to monitor this indicator. And if you have signals to liquidity risks, to take the proper or the consequential measures. It's at least a minimum per year recommendation for such simulations, but it was rather quarterly for each fund manager. However, when specific risks are identified that appear depending on the market situation, the simulations can also be made ad hoc. As far as governance goes, the RISMA guideline recommends that the exercises be carried out by the risk manager, but not the investment management function. If the results of such drills, let's say, are communicated to the customers, to make sure that the fund manager ensures symmetry in customer treatment. This exercise naturally must be sufficiently regulated in internal regulations of any fund manager, so to have a policy clearly stating the targeted risk factors, the risk scenarios, the working hypotheses, which is the period to reassess the scenarios. So if the scenarios generate high risks, how often do you reassess? And who does this per se within each fund manager? And what is the decision-making process? What is the role of these liquidity crisis simulations? They should first of all help fund managers be able to provide sufficient liquidity for the funds at any time. They must help them identify for each managed fund weaknesses of the investment strategies, especially liquidity wise. They must, of course, help them monitor risk management for these managed funds. And last but not least, when it's the least wanted situation, when you're very close to the materialization of a liquidity risk, if possible, to set various special measures. How are they defined? Well, you can restrict the buybacks of fund units, you can limit buybacks up to a certain cap, or you can just create a fund to operate with those assets that are less liquid. So this simulation needs to be adjusted to the specificity of each fund that you manage, depending on the investment strategy of each, on the type of the investor, and it relies both on the historical data that you have, if certain crisis scenarios can be defined. And of course, that's the most problematic situation when you don't have the relevant data, or you just identify risks that have yet to materialize up to that time. So to imagine, to define what would be an exceptional crisis and how you will proceed should such a crisis occur. Furthermore, the recommendation is that these drills, these simulations, be are carried out for every development phase of the products or the funds that you manage, especially when you define the product, define a fund, because that is the easiest time to make sure that you cover all possible risks that the fund will bear later on. How do you do it? How do you simulate a liquidity crisis? Basically, you simulate you simulate the assets of the fund, then you simulate the liabilities of the fund, and then you combine the two to have an indicator, liquidity, the result that you monitor. As go the fund assets, what matters is that for each asset you be able to estimate a duration and cost to make it liquid. And of course, each of these depends on the time frame for turning them liquid and the impact that such a trade might have on the market. We must also be certain that the said products match the real specificities and documents and information, and the way that turning them liquid somehow matches, of course, is according to the applicable laws of the market. And you must also consider those crises scenarios which, although they have a less materialization probability, they will have a significant impact, and you have to imagine what you will do at that time. On the liabilities side, the risk factors that you must always keep at hand would be the type and category of the fund investors. And from this perspective, the guideline actually provides examples, such as thinking the liquidity of the liabilities depending on the categories of investors, be it retail or institutional, depending on how they are concentrated, the level of such and such percentages in a fund, the higher the liquidity, the repurchase policies are different, and thus the liquidity risk can be higher. The location or the localization, if you want, it's possible that if investors in a certain fund have this joint feature, then you might have a repurchase option from the majority at the same time due to a factor impacting all of them at the same time. Or if we speak of investors with different strategies, long term or short term, you can also fiddle with how the type of liquidity is managed in this case. Other liabilities need to be taken into account. Those that can that have an impact on the liquidity. For example, derived instruments, the potential of them impacting the scenarios, or if your assets in the fund might ask recurring capital costs. The example in the guideline would be investments in real estate assets that ask for recurring maintenance or management fees. You have to consider them as well when simulating these liquidity crises. So once you are done with these exercises, these simulations, and with the need for liquidities for assets, for liabilities, you create those tools to monitor in an aggregate way the liquidity risk, and depending on the results of the simulation, you decide accordingly. You can apply the special measures that I mentioned already, or you can change the documents of the funds, you can change the fund's investment strategy, and so forth. Another recommendation is that if certain administrators manage several funds which altogether have a major impact on the market that they operate, the recommendation, as I said, is to take into account the aggregate impact of the liquidity crisis that their funds can have on the market. And a last aspect that I would like to refer to, and I believe it is relevant, especially with respect to what we believe is the future of the asset management industry, is that the guideline has an exclusive section for less liquid assets, where it's known that they have different risks that require personalize or customize such liquidity crisis simulations, because from the beginning they have less liquidity in the case of such crisis. And for these funds with less liquid assets, it is very important how often these liquidity crisis simulations are carried out, because the factors occurring on the spot, not recurring, are more likely to materialize. This is why in these less liquid assets, we assume that the simulations, those ad hoc liquidity simulations, should happen more often. Pretty much these are the main ideas. Thank you for your presentation. If I could ask, how do you see the implementation or transposing these recommendations on the Romanian fund market? Is it difficult, or is it something that the managers already did?
Just as I said before, we are talking about a legal framework that formalizes a practical approach that used to exist in this industry, but it surely won't change the specifics of such an exercise. I guess that the first issue is the fact that this sort of regulation contains almost exclusively qualitative factors and not too many quantitative factors. Basically, this is a sum of recommendable principles that managers are supposed to use, but it's the manager that decides on whether to use them or not and how to use it. In order to give you an example, it's like driving. The recommendation is to reduce the speed in order to avoid any danger. You will not know if you reduce the speed low enough before you get into trouble or not. So these decisions are subjective. They are maybe biased. It depends on your imagination, on your experience, on what you believe that the system in which you're operating may look like. And the problem is that post factum, because these judgments that you're making are subjective, their post factum judgment can be as subjective. You don't know if you are right or not. So you don't know. So you don't know post factum. But in this approach, before we get to the post factum phase, the financial supervisory authority may have a role. Could it provide some warnings? Can they keep an eye on whatever you're doing and provide some instructions? Well, we believe that after this locally legislation implements this guide, which by the way should be 30 September 2020, well, I guess that some exercises that the regulatory authority has already done should be repeated, more specifically stress tests, as the funds operating on the market and central banks have done after the 2008 crisis. They started to introduce these tests. Similarly, the regulatory authority that we have ran this test with our own local industry, and based on these joint exercises, we can entertain a dialogue. We can have an approach, the result of which would be to have a consistent practice and a consistent framework throughout the entire market for these exercises. Hopefully, everybody in this industry will be capable of administering and managing risk properly. Thank you very much. And now we are at the end of this panel, and although we are a little bit behind the schedule, we hope that the organizers will allow us to take 2 or 3 questions in our Q&A session. The first question comes from a Facebook viewer, because we cannot fail to ignore the event of the decade, our becoming an emerging market. So is a question, how do you comment that, and what are your expectations? Who wants to start? Cristi Pascu, maybe? Well, yes. This is an event that has to be celebrated somehow. We don't have that many events like that on the market, and this is an opportunity for Romania. I think this is a large leap that we are taking towards attracting major funds on our market. And I would say that just like the Prime Minister said, this is one click away Somebody said that this is one click away from the billions. These are 2 clicks, one on the left button and one on the right button of the mouse. So this is a major leap forward indeed. So we need the left click indeed, but we also need the right click, because it is important to categorize the emerging market in terms of the MSCI. So this is an important part. We are 0 point something in the FTSE. This is an achievement indeed, and we need to move on. We need to work some more. There's a long way to go ahead of us, and right now there are some things that we can see on the market, and we hope that we still continue, and we hope that other good things will start and will be available in the upcoming period. Sylvia? Well, I would like to say something in addition to Chris's words. Before we get to the CCP, which will be another leap forward and that will become more tangible in the future, we have the CSDR that strengthens the discipline rules for the disbursements. Although this will be delayed up to February the 1st, 2022, we have already implemented a number of technical functionalities that other markets already have. Cristi mentioned them, and they are welcome as far as our participants are concerned. It's the matching tolerance, it's the bilateral cancellation facility for the transactions, improving communication with our participations about the statuses of the disbursement instructions. So we are making steps, or taking steps along these lines, and the investment funds used to refrain from working with frontier markets, but now, infrastructure-wise, we are ready to welcome these investors. Cosmin? I would try to respond to this question from another angle. This is a first step, our promotion to the status of emerging market, but this step is not enough. But we should not forget that our market, with all of its players, is already there. It has started to become ever more sophisticated, and once the market is defined as being emerging, our expectation is that the market will be better connected to the global asset management industry and markets. In other words, the most significant trend I've seen, apart from changing the active strategies and the passive strategies, so the other significant move that I've seen is that we've seen the almost exponential growth of the alternative asset classes, private equities, real estate, commodities, liquid alternatives. So the sort of risk capital funds that are quoted on the stock exchanges and to which you can have access by investing into them through the stock exchange. These classes of assets, alternative assets I mean, used to account for 6% of the global capital market back in 2004. In 2018, they accounted for about 12 or 13%, and it is estimated that they will account for about 25% in 2025 to 2030. So that means that in a universe where the outputs are pressurized evermore, there will be a growing trend to open the access to the private markets, not to the public markets, including for the retail segment. What is the problem with these alternative asset classes? Well, the risk profiles are significantly different from the traditional shares and the bonds. And the regulations have so far focused on their risk profile. We suppose that the industry will move on as an effect of our becoming an emerging market. These alternative assets will become ever more important, and the regulatory framework will, of course, follow this trend. Thank you. I would like to get back to your topic, but not before passing the mic to Cristi, who wants to share some thoughts about the liquidity risk management. Well, always when you're getting recommendations, these recommendations advisably should be implemented, and we should take them as they are. Basically, these recommendations come after some events or some experiences acquired from the European market, and they play a role, of course. It is not less true that in many cases, that in some cases we are not considering these recommendations through the filters of the local markets. So sometimes you need to create processes and procedures that are not always enforceable and applicable to the local markets. But when it comes to risk management, I guess that they are necessary. We've been through some crises, liquidity crisis. Now we have a different crisis, a pandemic crisis. So we need to run some simulations. All of the industries are doing that. The insurers, the bankers are doing it. So I guess we asset managers should be doing it as well. So our market is small in terms of assets, and when it comes to the types of instruments in which local funds are putting their monies, we are not that big, but it's true that this is the trend, and we need to be ready that whenever a manager, that as soon as a manager has such an instrument at their disposal, we should be there for them, and we should be helping them to cope with the risks and with the stress. So we started up our day with some macro x-rays, then we went granular and we took a look at the regulations and rules that are applicable in our country. We saw what the impact was. I would like to wrap up the panel and I would like to ask you about what Georgina said, the union of the capital markets. What could be Romania's role in this European projects? Sylvia, on to you. Well, yep, just like Josina said before us, every country is important in the overall economy of this union of the capital markets. We are a small market indeed, but even so, we have developed a lot of things. A lot of other things have to be developed, and we need to keep up with the changes going on in Europe, throughout the European Union in terms of regulations. As far as our capital market is concerned, this union could bring a step forward because we would be obliged to move on, to move along with our peers and to take the steps that we would have otherwise taken more slowly and more carefully. So we need to keep up with the other peers and we need to adapt ourselves to the new changes, although these changes may have a stronger impact on us, just like Cristi said before me. But this is a good thing. And the fact that we are compliant and abiding and that we are adapting ourselves to the EU requirements will have nothing else but positive impacts on our capital markets. Cosmin, would you like to add something? Well, I like to say that visions may be different in my opinion. Right now, the local capital market is much more advanced in terms of regulation. Maybe it is over-regulated if we were to compare it against what is available on the market right now in terms of investment opportunities. And that is quite visible. There is an opportunity cost that the market comes up with because given the level of regulations to which the local market is exposed, because of the fact that we are actually an EU member state, this generates an asymmetrical effect compared with the other EU markets. And if we remember Thomas's graphs, I guess that the size of the local capital market is quite low, it's quite small, and these over-regulations are quite conspicuous, and we feel them dearly. Even if we are a small market, we should be assertive and we should attach some potential to this concept. Nobody will prevent us from thinking big and from trying to fulfill and to make the most of our potential in order to provide the more benefits to our members. Cristian, well, yes, I agree that we have our own place. I hope that this place is not the bottom one. We are on the last but one place. This is where we are. This is something beneficial for the market. As far as I'm concerned, creating this single market will generate a number of opportunities, not only for the SMEs, financing SMEs. Basically, they will have an option to provide financing everywhere on this market. There will also be an option of the investment funds. The European long-term investment funds that are a European initiative and that are not that successful yet. There are about 20 funds that have launched themselves under this title, and their aim is to attract long-term investors. The idea is to stimulate retail for long-term investments, and these funds are vehicles, pan-European vehicles, the aim of which is to keep the retail over longer runs in this loop. So basically, I believe that this will create some retail opportunities, some SME opportunities, and if we were to combine it with a proper fiscal policy, meaning that no differentiation should exist, or better said, some incentives should exist, well, I guess that this is going to stimulate the long-term investments in the retail area and also for the SMEs. So, of course, that there are some recommendations that came up in June, and these recommendations are supposed to be boosting the economy. At the end of September, a new action plan was supposed to come out for this market union, and we need to wait for the end of the month to see what will come up. Well, thank you very much. We talked about the impact of the regulations of the asset management. Thank you, Silvia Bulcănescu, Vasile Cristian Pasu Cosimizo, and Georgina Camerling. I will wrap up, but not before congratulating the association. for yesterday's initiative to start the financial education, and we, the team at Financial Intelligence, will be promoting this effort to promote financial education. You will meet in the next panel in a discussion with Stelian Muscalu about alternative investments. Before that, we'll take a brief advertising break. I was Adina Ardeleanu from Financial Intelligence. Thank you very much and have a great day.
Bună ziua, domnule Gustă. V-aș întreba foarte rapid, de ce să pun bani deoparte?
E foarte bine să-i cheltuiești banii. Dar să nu uităm un lucru, față de perioada dinainte de 1989, astăzi nu mai ai aproape nicio certitudine. Astăzi nu mai ai garanția că locul tău de muncă va fi etern, că în orice situație statul te va angaja într-o poziție sau alta și că îți va da o pensie care să zicem că va fi cât de cât confortabilă.
Unii ar putea să spună, bun, dar eu după ce îmi plătesc tot ce am de plătit, nu știu, chirii, întreținere și așa mai departe, mâncare, haine, nu prea mai rămân bani să economisesc. Adică dacă aș pune deoparte o sumă de 100, 200, 300 de lei, nu aș mai avea bani poate de mici plăceri.
Întotdeauna vor exista plăceri care vor fi probabil mai importante decât cuvântul economisire, respectiv investiții. Totuși, haideți să plecăm de la un simplu calcul pe care Bursa de Valori l-a făcut în urmă cu aproape 2 ani, care a arătat următorul lucru. O sumă de 100 de lei investită timp de 20 de ani în fiecare lună într-un fond de indice bursier care include dividendele, practic a relevat că după 20 de ani puteai să fii beneficiarul a aproximativ 149.000 de RON. Deci dacă banii efectiv îi puneai la saltea sau într-un cont bancar neremunerat cu nicio dobândă, puteai să ai doar 24.000 de RON în 20 de ani. Investiția într-un fond de indice bursier sau în indicele BET, de exemplu, al Bursei de Valori București, îți scotea în evidență în 20 de ani 149.000 de RON.
Ați vorbit acum de investiție de 100 de lei. Nu este o sumă într-adevăr, dar multă lume se sperie. Bun, am 100 de lei pe lună. Cum pot eu să-i pun în acel fond? Sau cum? Eu nu mă pricep, habar n-am. Ok, am 100 de lei, unde mă duc cu ea?
Eu cred că în orice moment e bine să te educi financiar. Industria financiară e o industrie care este într-o continuă dezvoltare. Aș pleca de la ceea ce am făcut chiar eu personal, plecând de la studiul de la analiza pe care a făcut-o Bursa de Valori cu acea 100 de lei pusă lună de lună timp de 20 de ani, am calculat și eu și am procedat în același sens, punând alocația copilului deoparte într-un fond similar. Și am ajuns la concluzia că la vârsta de 18 ani, plecând de la ceea ce a calculat Bursa de Valori, îi pot arăta copilului că ar putea fi beneficiarul unei sume de aproximativ 45.000 de euro. Bani care sigur că pot fi folosiți pentru foarte multe scopuri, începând cu educație, cu un apartament, o garsonieră și așa mai departe.
Hello and welcome to the second panel of the second day of the summit of the asset managers of Romania. As a journalist, to me this is very important. I watched yesterday's discussions and today's discussions. A lot of focus was placed on the lack of financial education of the Romanian citizens, and I guess that such events can add more education and more information. So that the end purpose is complied with. Basically, we want to have more people who are investing and are investing their monies smartly, because that's the end purpose. We will be talking about intelligent investments, because we have people who are very well trained, very well prepared. They have a lot of insight and a lot of information. They are working with a lot of money that they are multiplying. We have, of course, our host, Mr. Horia Gusta, Mrs. Alexandra Smedoiu from Deloitte, also Vice President of CFA Romania, Mr. Dragoș Roșca. I think we are going to have a lot of interesting discussions. Mr. Cristian Nacu from the IFC, and Mr. Dragoș Roșca, CEO Delta Asset Invest and President of the RBL. Hello, dear Mr. Horia Gusta, would you like to say something for the startup of this panel, and then we will be getting into the gist of the matters. Hello everyone. Well, alternative investments are part of the investment industry that we have. If I'm not mistaken, they account for about 50% of the overall assets. In the entire asset industry of Romania, they rely on investment funds, on alternative investment funds, as they are established by the freshly implemented legislation that we've had here in Romania. Also, I would like to thank Mr. Dragoș Roșca for being here with us in this panel. The private equity industry is an industry that was just around the corner. It is looking at us from a distance, because the alternative investment funds can make placements to the private equity funds. So, Stelian, on to you. Thank you very much. I guess we should start our actual discussions and debates. I would like to start with Mr. Hanga, President of the Bucharest Stock Exchange. We have an event. I heard Adina talking about that. It's our becoming and classification as an emerging market. It is an important event. We were expecting it even last year. Now the question to Mr. Hanga in the opening of this debate is whether he believes that this classification is sufficient so that the BSB can become relevant, as we all want it to be. Hello, and thank you very much for inviting me over to this event of the Association of the Fund Managers. Well, the question whether it is sufficient or not, I guess that nothing is sufficient enough. So you always need to do something more. If we were to look at the full half of the glass, we need to celebrate, because our Romanian market has taken a huge step forward. In the previous panel, Mr. Cristi Pascu said that we are now representing 0.something% of the universe of the emerging markets. I would like to take it one step further and would like to define the universe of the emerging markets. So if in the frontier market area there are investment funds that are managing about 5 billion euros, in the emerging markets we have a volume of about 250 billion. So basically that 0 point something is 0 point something of a significant amount of money, and this percentage depends on us to grow. So it depends on us. So I can see the BVB that has a tremendous growth potential. I'm looking at Poland, and I am giving Poland's example because we are looking at it. We have 14%, they have 40%. So what should we be doing in order to to make the most of our stock exchange? Well, I would like to say that we are indeed looking at Poland, which is comparable to Romania with some small differences. Basically, the, it's 4 times higher than Romania. Well, I visit Krakow 2 weeks ago, and people there were talking very proudly about the fact that the Krakow University is Europe's second university because it was created in 1380, in the 14th century. So this is quite a track record, and this difference between us and them was much higher 10 years ago. Romania has made up for this difference compared to the other neighboring countries. What we still have to do is, well, I am getting to that event. What I liked in Poland is that they have a very close connection. So what I like about that event was that the president of the country was present there. We are happy to see that Romania is now considered an emerging market, and that 2 Romanian companies are now being considered by FTSE. We had a representative from the Financial Supervisory Authority. The government was also represented there. Prime Minister Orban was there, and Minister of Finance Câțu was there. I guess that these are things that we should be doing. We need to be close to the Romanian government and the governmental institutions, because a Romanian capital market is an instrumental element for the internal market. If we want to have a powerful local and domestic economy, if we want to have powerful local companies, they need to have access to funds, and access to funds comes through the banks. But if we were to refer to the equity and capital, for that purpose the capital market is essential. So basically we are an essential pillar for the development of the local system. Of course that we have projects, we have the central interlocutors, we are going to be more visible, we will be better positioned, since we are a financing platform for the Romanian companies, and for that purpose we need to be more visible. We have good results. If we were to look at the figures defining the capital markets, for instance, about 6 billion euros have been taken from the capital market as bonds issuances. The Bucharest municipalities, other municipalities, private companies from the banking industry or other industries. If we were to look at the equity, we can see again major companies from Romania that have obtained funding from the Bucharest Stock Exchange, like MedLife, DG, and other groups.
We also have quite a great performance if we take a look at the past 8 years. The performance has doubled compared to the other countries in the region with respect to prices, although there's still an upside and the assessments are still below the other markets. So these are steps that we're taking forward, and it's a convergence process that we don't expect to end overnight, but we do rely on the fact that it will continue, and we do work a lot to make it go on. I saw recently a big Romanian company, U8Bet, looking for funding in the US, actually hiring the players. I really want such players, the first Romanian unicorn, to come to the stock exchange to look for funding. What's the perspective? When will we see a deep enough stock exchange so that you, I bet, to no longer go to the US and to come here for funding in Romania? Well, let's take a look at the assessments. UIBet is 10 billion. Yes, after funding it should reach 15. Yes, you are right. If you take a look at the fund management industry, it's about 15 billion euro in pension funds and another 10 billion euro in investment funds. I really want such simple companies as UIBet to come to Romania, to the Romanian market. On the other hand, this is a global player. Which is a small market. I would love to see them coming to Bucharest, maybe as a symbolic gesture, maybe apart from the listing on the other exchange markets or stock markets. This is a company that was born on the Romanian market, but let's think that the Romanian market can be a solution, a funding solution for such a player. It's a bit too far. So I was wondering about the perspective, of course. As in 10, 20 years' time. We have smaller companies, I think listed 5 or 6 years ago, assessed at 1 or 2 million euro, and that now between 50 and 100 million euros. So there are local smaller companies that use the Bucharest Stock Exchange platform and increased their activity, raised capital, and have gone through M&As, and they've grown really significantly. We are looking forward to when we will really take pride in a stock exchange. It is, but it's still a Cinderella. It has a huge potential that has yet to be tapped in full. It's also difficult, of course, given the pandemic. Cristian Nacu for Senior Country Officer, Romanian Republic of Moldova of IFC. If I could refer to the impact of the COVID crisis on the industry, because we keep hearing the problems that the pandemics generated. Thank you for the invitation. It is quite the pleasure for me to be here in the panel that will rather refer more to private equity. As a former professional in private equity for more than 12 years, I continue to feel very connected to the industry. But as you said, here I represent an international financial institution, the biggest in the world for the private sector for emerging countries. IFC as part of the World Bank Group. The IFC does not just invest in private equity, but in many other types of tools. It uses loans, the entire range of debt services, but also equity and quasi-equity, consultancy services. There are also investors in private equity and venture capitals as limited partners, and we do this where we want to reach companies that we couldn't reach directly or that we could not invest in directly. So we do this through funds. Although we speak of another risk profile because we know that private equities take risks that are a bit higher, but also smaller scales can be done directly with respect to such projects. Now, the private equity industry has been impacted, as the entire economy as well, by the recent COVID crisis. And although for Central and Eastern Europe, the entire fundraising landscape was not quite fortunate for this, knowing that there are private equity funds that are no longer as active in Central and Europe and Eastern Europe as they used to be. To this, the COVID issue came and added, which we have to admit makes the fundraising market even more difficult, because the risk appetite for certain areas of the big investors in private equity is starting to change. Particularly in Romania, I think it is a happy, fortunate situation, given that there were things that changed to the better somehow, compensated the lesser interest of other investors. And I'm referring here to the recent law changes that allow for pension funds to invest in private equity funds from now on. They're not so recent anymore. Occurrence of private equity funds and venture cap mainly funded by AIFs and manager of government money, but also some businessmen that started to trust these type of tools and invested in private equity funds. I would refer less to the fact that maybe less businessmen started to organize their own family offices. This is something that they could do more and better in the future. But another positive aspect is the crowdfunding platforms. The Seedlink already has remarkable successes in crowdfunding as alternative funding sources. The IFC is, as I said, a traditional Arabic investor. We have invested all throughout the world. In Eastern and Central Europe, I would refer, because we heard here, you might bet, I would refer to the fact that we invested in Early Bird 1 and 2, the venture capital funds that have basically launched or pioneered the investments in your back. That's why we're quite happy with the performance of the funds that we invested in the region. And we hope we identify other fund managers that we can invest in the future. I would stop here. If there's time, we can speak of criteria as well. Why would a fund manager invest and look in investing in them, in this particular type of companies, it's a lot to say. So we will come back to the Q&A session. We'll come back to you. Let's tell those who are viewing us that they have the possibility to ask questions from what we've talked about. We now move to Alexandra Smedoiu, Vice President of CFCA Romania and Deloitte Partner Romania. We will speak of the real estate funds and right legislation. This is a very interesting topic. There was a vague idea that I had. I did my research and I saw that these are very interesting, especially for the small investor, but I'm sure, Alexandra, that you can tell us more about them. Please. Hi, everybody, and thank you for the invitation. Before going to the specific legislation on real estate fund investments, let me refer to my co-panelists' ideas. The need to fund companies and their need to be funded, actually, because I work with companies in various phases of development and would need funding. They are maybe not at the time to think a listing on the stock exchange, but somehow focused on the private equity range. I see that they're quite effervescent, to be optimistic, in the technology sector. Very many startups or looking for funding for their scale-ups for future development. From what I notice in the market, there is money and there is the interest to fund these type of businesses. Contrary to what I hear in Romania, there are in Romania interesting ideas and great businesses that can actually be used in such investments. But what I believe is missing uh, a bit more trust from investors. This should come from a legal predictability and macro data. Promoting the stock exchange to the emerging market level is very important and will really weigh a lot in the investors' opinion in Romania. It's a great news for us, and I do hope it contributes to increasing the appetite, including for private equity. And what I also noticed in practice, if companies that, so we have the companies that need funding, we have investors, but it's very difficult to match the proper funding structure to them because the Romanian legislation, especially the fiscal one, but not just that, is somehow lagging behind in the basics, whereas economy has evolved a lot. And we heard before about the crowdfunding. There's a pool of attracting small retail investors, which is very, very high. If you could create a platform which is easy and simple for such investments, but it doesn't exist. It's very difficult to structure such an investment. You have to work with limited liability companies that have a maximum 50 shareholder number. It's also another limitation is from how investors can be compensated, because we don't have, as other more developed jurisdictions, the possibility to create stock classes so as to spread out the risks differently among the investors. So these are being done, but it's difficult still. There are situations in which basically you have the money on the table and you don't know how to turn them into a viable investment for the investor to get the money throughout the investment period in a certain way and to share risks with the shareholders. So there are certain limitations of the legislation which unfortunately weigh a lot. On the crowdfunding sector, even if we speak of Romanian companies, I looked up jurisdictions with flexible legislation and favorable legislation. For example, Germany. This has a special legislation for crowdfunding. It's not easy to come from Romania to go to Germany to do this, but if you want to draw a certain type of an investor and you want to offer certain stock class or a recurring disbursement of dividends, then you have no choice. And this is quite limiting because taking this investment structure outside Romania is, first of all, very expensive because you have to use consultants, lawyers, the setup costs are very high, and somehow kill the structure from the beginning, if I may say so. The same situation is found in real estate as well. Maybe things are a bit more familiar in this case for a great part of the investors, but what I see is in Romania appearing big groups that can draw investments of tens, maybe hundreds of millions, and there are investors interested in investing in the field. But we also have here obsolete structures such as limited liability companies or disbursements that cannot be made throughout the year, uh, tax issues. And let me exemplify. We have had since last year the alternative fund legislation. It's a European legislation. It's very good to have it, but it's not sufficient because in Romania, since we do not have a fiscally transparent entity that can exist like this, joining to such a structure raises the costs for investors to a level that somehow, of course, chews on the yield. So you weigh creating such a structure, an institutionalized structure, let's call it, or sticking to the classic investment in a limited liability company or a joint stock company and just taking the money through a shareholder loan, which, in my opinion, are very obsolete and really shouldn't be present in 2020 when we want to draw international investors. Other examples that I can provide and will set structures very well would be the security or to have security assets for certain transactions. There's obsolete legislation for that as well, and various types of legislation impacting the real estate sector. A recent example is a recently added tax of 80% for transferring agricultural lands. So these are the limits for which within we work for funds in Romania for private equity, and transactions do happen. But if you would improve a bit legislation and fiscality, we would have a lot more to draw our investors with, and we would do more structures in Romania. But is there a working group maybe with the lawmakers in Romania to somehow guide discussions to this area of modernizing the legislation? There are various areas, let's call them working areas, but nobody really referred to the private equity funds issues to see which are those absolutely necessary aspects, because it's not all from the tax law. Some are about changing the tax law, but also company laws and other types of such laws. We should really be focused on this area that, in my opinion, has great potential, and I'm referring here to what I see happening on the market. we have to tell these instructors that they have to set up an investment structure in the Netherlands or in Luxembourg or Germany. And no, we should really take these laws that need changing, set them in a bundle, and change them accordingly. And you mentioned very well in the beginning, there are countries with a longer tradition with investments, which take real estate, created a specific legislation. You can set up a company with the main object of activity investments in real estate, not with a preferential tax treatment. No, but at least don't double the tax for investors that plan on putting their money there. And that allows the necessary flexibility for a shareholder to speak with the investor or to disperse money without seeking all sorts of loops or loopholes. And such as a family office is another example here, which is very developed in Luxembourg type of countries. Some say we have to, well, when I say that we have to compare to Luxembourg, it might be weird, but no, it shouldn't be like that. We are also in the EU, we are also in the emerging market. There's nothing that we can do less and we can compare easily. There are companies developed by Romanian entrepreneurs with big businesses have expanded with this type of family office legislation would really help a lot, and it would allow more to develop them, because we want to be generators of multinationals, not the branches or subsidiaries of multinationals, as you gave the example. Now, on the legislation, Royds, that we referred to earlier, that gives the possibility, with respect to what you said, to use the money from here, not necessarily the money of foreign investors, to grow this real estate sector, which is quite effervescent, with slight syncopes from the 2008-9 crisis here, 2007 crisis in the US. So I think it's just a question mark with respect to the syncope appearing on this market. We'll see if COVID was this syncope or interference in the Romanian market. So the Hungarians, the Bulgarians, do they have this? So I'm going to our neighbors. What do we do? Because they have the legislation. How can we have it? And how can we invest the money in an area in which, if you take a look back, or given all the problems, we see constant growth? Some of our close neighbors have them. Bulgaria has such a type of legislation for investment funds on real estate. Maybe we somehow parallel them with the IIFs, which can also be used for real estate as well. But for what we need to fund in Romania, this is enough for us. This legislation is good for a very mature market where all plots are developed and generate lease income, whereas we are still expanding, and unfortunately the development phase cannot be funded like this, like funds. So shareholders seek out the help of banks, of internal resources or IFCs, and then it's difficult to go to an AIF structure because you no longer need it. And there's also another limitation in the sense that most real estate projects need to be listed on the stock exchange, and This is a criterion taken from a mature market. A mature market is the one that developed a long time ago. The assets were leased for a long time, and then it was refunded through the stock exchange through a listing. So it's good, but it's not sufficient for the level of maturity of our market. And it's a pity because I believe it's quite the potential here and quite the interest as well. Okay, we will come back to it because I have some more questions about the real estate area, which is very interesting and very active with respect to investments. If I could go now to Dragoș Roșca, CEO Delta Asset Invest and chair of the Romanian Business Leaders, let's go back to the stock exchange listing. Let's see if this is a solution for the private equity funds, because we spoke a bit earlier of the rather not so deep stock exchange market. Mr. Roșca, hello everybody. Hello to your listeners and viewers. Definitely, it is a solution. We are now at a time of evolution of the industry, of the community of private equity in Romania. Unlike the previous years, new types of private equity funds appeared. Cristian said just now that there are private equity funds with investments in technologies, rather recent event in Romania, recent phenomenon in Romania, 4 or 5 years old, and these funds contributed to placing on the market and to the development of an entire ecosystem of companies in the technology sector. There are companies that grew significantly, some very quickly, and Cristian referred to, I bet that Early Bird was one of the first investors. But there are very many other companies that invested in the past that received investments in the past 3 or 4 years and will be able to list on big markets following the UIBET route. And here they prefer Warsaw, London, or US markets if we speak of unicorns. But they're not all going to go there. Most or the vast majority will have a lower growth rate, but they will continue to provide great investment opportunities. And the exit mechanism on the Bucharest Stock Exchange market, and if we refer to here its aero component, could be very interesting. It can also be interesting because these type of private equity funds, those in technology, but not them alone, those acting with brick and mortar, so in the traditional industries like services, traditional trading, manufacturing, and so forth, have switched from the investment mechanism that took over major shares, now switched to minor shares, whereas this type of latter investment allows a stock exchange exit as a very viable solution. As Cristian mentioned earlier, we have the possible examples of MedLife or Digi that listed on the stock exchange minority share bundles that used to belong to majority shareholders and wanted the exit. So this showed that the Romanian stock exchange can accommodate such IPOs. And obviously, it will continue to do so. We have also in the business leaders community a very big number of entrepreneurs in Romania, about 200 basic members, plus another extended community of over 5,000 various business people in Bucharest, in the country. And we notice in the events and discussions that occur in the community, an ever-growing interest of entrepreneurs with respect to funding growths with minority bundles or IPOs. What I do believe should happen now more, as opposed to the previous period, is for the stock exchange to be more active toward the entrepreneurship, toward the entrepreneurs sector. It has done this before with the number of companies that they've selected and prepared for a certain period of time to get familiar with the mechanisms of the stock exchange. One of them is another company in our portfolio, Delta Asset Invest. Two performance that entered the Aero stock exchange program a year and a half ago, most, and decided with the rest of the shareholders to list on the market this October to give the opportunity of investors to do so for those who want, and also to draw additional development resources, because in any IT company that develops quickly after one or two investment waves with angels, with support startup funds, there's also the time when you need more money for procurement, for international development. So we do believe that the stock exchange market is a good way to develop these companies further. And there's also the BitNet example. So we are very, very optimistic, and we trust that things are going on a good way.
There are two options. Sometimes funds can turn to the stock exchange, and there is the secondary buyout with a sale from one fund to each other. If we were to try to strike a balance between the two, in Romania, what would be the winner? Would they go to the stock exchange or to other area? Well, this is a very tricky question. It's a difficult question, a tough one, and let me explain. Well, traditionally, the exit of the private equity was to a bigger private equity or to a strategic one, and less to the stock exchange, because the stock exchange was not that prepared to accommodate big IPs, big operations, and the Romanian stock exchange could not accommodate such IPOs. And we know that there were initial public offerings that were big and they failed, and oh, you know. So we believe that on one hand, the stock exchange was not prepared at the time, but there is another reality which can be seen in the figures. In general, the Bucharest Stock Exchange did not make the most of the quoted and listed companies. We have extremely valuable companies that have already been listed on the stock exchange, and if we were to uh, look at the multiples, evaluation multiples, they are significantly lower than the ones used by other transactions with the same canopies. So, in on the Bucharest Stock Exchange, there are very few companies that are traded for such multiples. They are traded 6 times, 8 times, but not for EBITDA, but for earnings. So the Bucharest Stock Exchange should be, I believe, attracting more money in order to make the most of the assets that already exist, in order to be attractive. But on the other hand, there were some successful IPOs, MetLife, Digi, Sfera, indeed, the outputs were good. So basically, there were good exit outputs. We continue to trade on that, and many of these companies are at a growing phase. They are getting a lot of investment injections, so the growth is there. The growth rate is quite high. I'm talking about their turnovers, and of course that their profits and EBITDA are small. So generally they don't pay dividends to their shareholders, and therefore the figures are different. But upon the whole, this it is important to find the right track. It's also important to find the right investors that are willing to pay a good price on the Romanian Stock Exchange. So in this way you could find some alternatives such as the private equities, but the stock exchange give you something that the other options give you, such as the strategic investors and the private equities. It enables entrepreneurs to look for capital in less restrictive conditions, and also in conditions in which they can decide to keep the control over their businesses. Because sometimes if you have a strategic investor, you lose control. But now, when in Romania you have a new generations of entrepreneurs, there are professional service businesses, industrial services, technological businesses that are being managed by new generations of entrepreneurs that would not let go of their babies. They want to continue having a say. They want capital, they want investment, but they want yield on their controlling stocks. So basically, the Bucharest Stock Exchange provides a framework which is more favorable to that sort of thinking. So you need to know what you want. You need more money, you need independence, you need a future bringing you a new growth phase. So these are all things that everybody needs to think of. You need to think about that. You need to make plans. The Bucharest Stock Exchange is regarded by the business environment more carefully than it used to be regarded before, and the success stories of the past few years provide make us think that the Bucharest Stock Exchange may be a good alternative. Thank you very much. These discussions are very interesting, but time flies. I would like to get to the Q&A because there are a lot of questions, and I would like you've raised the ball for me, talking about the stock exchange. Well, about the confidence. We have a question. We have a question, sorry, to Mr. Hanga. Do you have any plan to provide incentives to individual investors? Well, the answer is yes. We are now having talks that are very well advanced with the state authorities. One of the major issues is the interaction of the investors with the tax authorities. So all of that paperwork, bureaucracy, let's name it that way, yes, when it comes to taxation. So we want to streamline the whole process. We want to promote an idea regarding the withholding taxes in order to reduce to the minimum the interaction between investors and the government. Of course, that for the government this will simplify a lot of things because it will shorten the way of the money into the state budget. Of course, that there are some technicalities that need to be taken care of. When you have earnings, things become simpler if you charge and withholding tax. Of course, that the brokerage ecosystem needs to be developed in order to have a better online presence, because you know that the interaction between us and the clients is done ever more through the internet. So customers are no longer interacting directly with the brokers. They are not visiting each other. So we have brokers on our markets, those that are dealing retail, that are quite active, and want to have the access to the market streamlined. Of course, there are some promotional campaigns that we are running in order to get closer to our stakeholders. Another difficult question to you: when do you think that we'll have a daily growth of the trading values? So there are very many layers in this pie, so to speak, but the person asking the question asks if we can talk about a daily doubling of the transactions. Well, we are never going to see the doubling of the transactions daily, but what I believe is that the person asking his question is that we would like to see the values of the traded value, and I would like to thank the person for raising the ball for me. This year has seen a historical maximum value, so the year 2020 represents a maximum with 60 millions traded as an average every day. So this is a growth by nearly 50% compared to the past year, and this is a value that we've never gotten closer to. In 2017 we had an average of 58 millions per day. Now we are at an average of 65. So apart from our expectations to see a daily growth, well, the trend is very good when it comes to capitalization, when it comes to the evaluation, and I do agree to what Mr. Radu Joja said before me, and also Mr. Naku. The COVID has troubled the Romanian and the world economy, but owing to the COVID, markets are now full of money because of the aids that have been provided from various sources. Is this an opportunity for growth? Is this an opportunity for growth or not? Well, yes, it's an interesting question. Well, this is an opportunity to some industries, and of course it's a disaster to many other industries. There are some very clear winners of this crisis. I'm talking about the internet, online operators, e-commerce. So all of the companies involved in this line of work have thrived. There are some other areas, so for instance, commerce with some commodities, technology, medical services, medical technology. They have all thrived, and they will continue to earn more. You know, we are talking about the vaccine and so on. Basically, the World Bank Group launched a facility some time ago to encourage the production of protection materials, ventilators, everything that deals with the anti-COVID protection devices and means. So the World Bank provides loans and various instruments to producers of these goods. Also, the emerging countries, we are an emerging country, have received these loans, but these loans are also available for the developed markets, whose end beneficiaries are developing countries, developing nations and peoples. Of course that there will be some areas, if we talk about traveling, if we talk about hotels and restaurants, that will be suffering for many years to come, and probably their problems will be quite painful. So all in all, I don't think that things will be compensated, but whoever will be focusing, whoever is focused will find options to make the most of the current situations. Markets are highly liquid during these times. I would like to ask a question to all of the participants in this panel, because at a time when we talk of investments, smart investments, some predictability is needed, and I'm talking about the economy part, not about the political part. So that is why I'm asking you, what is your view of the future, economically speaking, so that we can talk or refrain from talking about trust in investments and in making investment, in investing in general. So who would like to break the ice? Alexandra? Well, yes, of course. Well, I believe that we, as specialists, need to send across or confirm a very important message for the market based on the estimates that we are making. Because when we are bombed literally with negative news, the first impulse is to wait and see what is going on, what will be going on. And it's this sort of behavior that creates the hurdles and bottlenecks of the economy. The same sort of behavior was the one that created the magnitude of the big crash of the 30s, this wait and see sort of behavior. Of course, that we don't need to throw ourselves head on, we don't need to dive into optimistic investments. So, because this is exactly that will create the so-called self-fulfilling prophecy. As far as I'm concerned, and from what I've seen in terms of the expert analysis that I'm running, investors expect some credibility and predictability in terms of laws, especially fiscal laws, taxation laws. There have been positive developments, less positive developments over the past few years. As positives over the past few years, we haven't seen any significant taxation models. I'm talking about the single tax and the VAT. So these are two positives, but there have been many other legislative attempts to amend or change or supplement the law that have affected investors, and they basically took place overnight. The banking assets tax, the farmland tax. So basically nobody is against taxes. So I haven't heard anybody talking about not wanting to pay taxes. But what people want is to see changes that are not being done overnight, because this does no good to the business plans and everything becomes unclear. Investors wait and see, they want to see new estimates, and they are unable to change their policies overnight. It is very much important to keep that sort of predictability, especially for the upcoming period, because we are again bombed from all places, from the European Union, from Romania, that when it comes to the economy supporting measures that have been implemented, a recoil will come. There will be more taxes and higher taxes to be paid. We understand that. We need to have enough time to digest that piece of news, and in order to be able to align our business plan accordingly. Of course that this is a key point and all investors request it. Thank you. Dragos Roșca, you have the mic, please. Well, yes. It depends. If we were to look at things from the investor's angle and from the entrepreneur's angle, the upcoming period is not going to be simple at all, and that's true and conspicuous. Just like Christy said, there are industries that will be affected for a long way to come, but for a long time to come. But what is important, and I've seen it in Romania, is that on one hand, there's a different attitude, completely different attitude in terms of the decision-making system. I'm talking about the government and the national bank and the partners of the business environment, such as the banking and financial system. So basically, the attitude is completely different if we were to compare what they did back in 2008. So back then, it was like a dog-eat-dog thing. Everybody was working for themselves, and the outcome of that was catastrophical. 50,000 companies, Romanian companies, were closed down. Some of them were big, some of them were high. Retail distribution sectors were devastated. But now the approach seems to be more constructive, and in a way, we understood that we depend on each other and that we cannot continue to ignore whatever is going on with the other neighbors, so to speak. So communities of the business environment started working together among themselves or with the national bank, so I'm positive about that. It's not going to be simple, but if we work together, we will continue to be successful together and overcome some crises together. A different attitude is to be seen throughout the European Union. The EU nations are cooperating differently. They exchange positive experiences. They have mechanisms in place that they use to support each other. Some of these mechanisms are just on paper yet, but they will become tangible. Things will move on, and we'll see results because the commitment is quite serious in political terms. So I'm more optimistical, but it was like mild optimism. We need to take care. I am as optimistic and as my colleagues are. Um, I I guess that we should get down to simpler things like the evaluation of companies. Romanian companies should be evaluated to higher prices. And this will happen if their environment is more stable. So the measure of the risk is volatility, including the volatility in terms of legislation, macroeconomic environment. So a stabler environment will always be translated into better evaluations of the Romanian companies. So if you're building a house, its value is not given by the appearance, but also by the street, by the location, by the neighboring amenities like a park or something. So we understand ever more that we are not dependent, that we are part of an ecosystem, and the way in which we live and the value of our assets depend fundamentally on how stable our surrounding ecosystem is. And last but not least, Cristian Nacu. Thank you. Well, I would like to say the following thing. We should not forget the economic fundamentals. Romania is one of the largest nations in this region. The private sector is powerful. It's well trained. It's quite resilient. Who has lived through this crisis is the powerful one and has some abilities. The market's needs are huge. They continue to be so. So that comes with a host of opportunities. And in entrepreneur terms, the Romanian entrepreneurs have a good capacity to make the most of all of these opportunities. We also have support, just like Dragos said before me, from the European funds, from the European Union. So all of that are building my optimism. Of course, that with a little bit of attention on our infrastructure needs, because if investments start, they will be generating like spectacular growth, baby steps, quick wins will be as important. I am sure that the quick wins will attract some other more spectacular results, and that is why I believe that we have every reason to be optimistic. So basically we need to refresh our laws so that they can keep up with the times and with the realities. So there is a long way to go ahead of us. Dear ladies and gentlemen, thank you very much for your presence and for attending this summit. I am Stelian Muscalu, and hoping that we've provided more information to those wanting more education financially, I am bidding you goodbye, and I would like to pass the floor to Mr. Nasta. To Mr. Horia Gusta. Thank you, Stelian. I would also like to thank yesterday's speakers. Hopefully we will see each other next year. Hopefully we will see each other physically and not through the online facilities. I would also like to thank to our partners that helped us organize this event. I would also like to thank to our listeners and to Boof Media that has supported us all throughout this event. Thank you very much and see you next year.